everyone, and welcome to my morning report analysis videos on Wednesday the 24th of January with me, Richard Perry, market analyst at Hantec Markets. The dollar is getting absolutely panned, and the sentiment has obviously changed again in the fact that there was a degree of consolidation that was taking hold, but there was subsequently, we saw yesterday strong data out of the Eurozone. We also saw sort of a positive reaction for the yen against the backdrop of the Bank of Japan as well. So we've seen the dollar under pressure, and that comes despite the fact that we've basically held up pretty well on treasury yields on both 2s and 10s. But look at this, we're seeing a real divergence now between the performance of the dollar against the yen, for example, and the treasury and the 10-year treasury yield, which tend to move fairly well in tandem to an extent, but look at this dollar index breaking sharply down again. Looking at the long-term chart of dollar index, you can see that the move to the downside is likely to continue. Look at that, having broken now to levels not seen since 2014. So really is continuing to move lower on that dollar index, and yeah, certainly looks as though we're going to see further downside on that chart, having broken down. So we're seeing that. Interesting that we're also seeing that move pretty much across the pairs. Look at cable, 40.83. 140 was the key level to an extent, also psychological, but just didn't really stop, bursting straight through there. 42-43 area looks on. Euro dollar above 23.20, which was the previous high. That's 3-year highs on euro dollar. And dollar yen breaking down below 110 figure, sort of looking further weakness on that. So the major markets for the dollar all breaking sharply lower. Interesting that we're seeing also gold breaking out above 13.44. That was resistance. That now opens 13.57. And yeah, the another interesting move actually coming on oil yesterday. Had gains, but we saw the API inventories overnight, which sort of showed an inventory build, and this could be the beginnings of the sort of building up once more of US inventories, with US production pulling higher back towards 10 million barrels per day again. So watch out for the EIA inventories this afternoon. But yeah, lots of dollar weakness across the board impacting these markets. Equity markets are down. You had a sort of a broadly sort of neutral session on Wall Street, not a great deal of direction, but you had a mixed session on Asia as well, but the European markets are taking that negatively, as the FTSE especially sort of seems to be underperforming today. Now, lots of data out today. We're starting with the flash PMIs, which have come out this morning. A bit mixed, but the composite PMI for the Eurozone, again positive, 58.6, mixed on manufacturing and services, but still strong on the composite number. Then we're looking at UK unemployment at 9:30, expected to remain at 4.3%, but the average weekly earnings will be the key there. Can average weekly earnings start to pick up as inflation starts to drop away? That would be the important thing there. Into the afternoon, we've got existing home sales for the US, expected to dip marginally to 5.7 million. And then weekly crude stocks expected to actually show an inventory drawdown of 2 million on the EIA numbers, but the API data yesterday showed a big build of inventories, so that could surprise to the positive side on the build side. So yeah, lots going on there today. So my chart of the day is, let me just show you, the Aussie Yen. Now, Aussie Yen, big bearish engulfing candle yesterday. Interesting that came bang on that resistance of 89.08, pretty much to the pip, falling away, breaking that uptrend as well. Looking at these momentum indicators as well, RSI dropping back. If the RSI goes below 50, that would be sort of certainly a corrective move. But look at those MACD lines, having crossed. Given a bear cross, they've actually now completed a bear kiss, so it doesn't look great there for that momentum as well. The stochastics crossing lower, so pressure building to the downside. on Aussie Yen, and that would be a suggestion that the markets are turning more defensive, I would say. Here we see the hourly chart whereby you've got resistance. Look at that pivot on the last few days, 88.40. Today, this morning, we've seen a bit of near-term resistance at 88.30, but certainly it seems as though 88.40 area, 88.30 to 40 seems a bit of a resistance area that could well be sort of a selling opportunity with these technical indicators looking a bit more corrective now. That rally that we saw for the last sort of couple of weeks on Aussie Yen seems to be more correctively configured, certainly on the MACD lines anyway. And it'd be interesting to see if the RSI now fails around the sort of 50-60 mark and turns back towards 30, because that would be again a suggestion that sort of momentum is building to the downside. 87.90 initial resistance, then you're looking at 87.75, 87.40 and 87.20. You can see these levels. 87.20 is clearly a key level for that January low. So I wish you good luck in your trading today, and I'll speak to you later.